Hello, and welcome to the August edition of the Dairy Market Update. This month, we are looking at the potential impacts that the recent weather could have had on the dairy industry. This year's May and June were the hottest and fifth driest May and June on record. It is this combination of high temperatures and lack of rain that has led to soil moisture conditions at the end of June being the driest on record for the UK as a whole. As this weather continued into July, it is likely that conditions have got more challenging since then. Despite this, latest milk production statistics show that volumes are falling in line with seasonal expectations, with the impact of the dry weather yet to materialise. This is likely because farmers are compensating for poor grazing behind the scenes, and the true scope of the situation might not become apparent until later in the year, particularly if these current conditions reduce the already tight silage supplies. To better understand the impact that this weather could have on the dairy industry, we can look back to 1995, when a particularly hot and dry August hit the UK. Promar Milkminder data from this time can shed some light on how the industry coped. As you would expect, the proportion of milk achieved from forage dropped significantly in the summer of 1995, compared to the 5-year average. Despite rain returning in September, the forage proportion did not recover. In addition to this, milk yields fell, dropping 2.1% in August compared with July. At the time, the expected drop between July and August was around 0.7% based on a 5-year average. This additional drop in milk yields wiped out around 15 million litres of milk off of GB milk supplies in August 1995. Yields did appear to recover later in 1995, with performance back up above the 5-year average later on. To see how this was achieved, we can look at concentrate usage at this time. Here, we can see there was a step up in concentrate usage through July, August, and September compared with the normal profile. The additional concentrate usage was 15% in August and 12% in September. To put this in context, if we applied the same increase in concentrate usage at the current concentrate prices, which is around £225 per tonne, the additional cost to the GB dairy industry would equate to £265,000 per day, or around 0.8 pence per litre for the milk produced over those 2 months. It should be noted that this historic analysis is based on overall country averages and does not take into consideration regional or localised issues. The impact on individual farms will be highly variable. We should also bear in mind that 1995 was 23 years ago, and the GB dairy industry has moved on significantly since that date. Average milk yields have risen more than 30%, driven by increased concentrate usage, which is up more than 40%, and with less milk coming from forage. Because of this, the impact on the industry this year may not be quite the same as in 1995, but until the full results are in, historic data gives us an example of the effect that such weather has had on the UK before. To keep up with how the dairy markets are developing, both here and globally, please visit the market section of the AHDB Dairy website.